Good. Now let's continue. You'll remember that the last ledger account that I completed was the work in process, and I made use of a balancing entry there for that was finished goods because I already had the balance, and so we can move on to our next ledger account now, which is the finished goods. Okay, so the finished goods is the format, at least not filled in yet, and if I go to the Word document, what do I see? I see that I had an opening balance of 152,121, and I have a closing balance of 456,540. Okay, that is what I have. So once again, I start with my opening balance that was brought down and is given as is. What do I know? Well, I know what I was given is I was also given a closing balance. And the closing balance was 456,540. Okay, all these transactions, so it's taking place now on the 31st. Now, just keep that one there. We know that we had work in process because in our work in process ledger account, we had the balancing entry finished goods for that amount on the credit side. So when we go to finished goods, we have the corresponding entry there on the debit side. Okay. So what do? We add the amount. We will have the exact same amount on the other side. We were given the balance, and now again, we have to balance this ledger with an entry. And the entry with which we balance it now is our cost of sales. So you get the rhythm here. Every time we complete the journal and we use the balancing entry, that account that we use for the balancing entry becomes the next ledger account that we complete. This cost of sale, we will record that in the general journal. And once again, now the cost of sale will simply be the difference between our total and what we have on hand, our balancing amount. And now we have a cost of sale there of 2.748 million. Once again, nothing changes over midnight, and we can simply bring down that same balance. So then now we have finished good. Before we actually move on now to cost of sales, let's do our indirect material first. So let's go here. And you'll see for indirect material, I used a bit of a purple there. And what do we have? Well, we have indirect material inventory there. We have an indirect purchase there. And that is really all we have. Okay, so what do we have? We have the inventory amount, the beginning opening balance, and we have our purchase. Now, let's just go and have a look here. How do we do this journal? Well, on the first day of our financial year, once again, we had a balance that was brought down, and it is given to us as 37,515. Then we also had that credit purchase, so it's creditors control, will be recorded in a creditors journal. The amount was given, and we can simply add it up. Okay, same amount will be recorded on the credit side of our ledger, and then on the last day of our year, we'll do something else. We will say, okay, we had factory overheads. Where did I find that? Let me just show you that again. Okay. We will be given our factory overheads. Let me just see what I did here. Oh, yes, man. Remember, we did factory overcost here. And when we did our factory overhead cost here, we already included our indirect material there. That was the indirect material that was issued to the factory. So now when we are in indirect material, we are simply going to complete the corresponding entry that will say factory overhead on the credit side. Okay, in the general journal, and that is the amount. And then, of course, if we have entries on the debit and on the credit side, and it's clearly more on the debit side, we have to balance it here on the credit side. And it seems like I didn't do that. That's very weird. Okay, so it's the correct amount, but I actually didn't complete it here. Oh, I did. Okay. Let me redo that quickly just so that you can see what happened. We were given an opening balance. Okay. We have the creditors control that transaction that we had there for the indirect material. Let me just show you that. Indirect material that we purchased on credit. So I've just recorded that. Then we have the corresponding entry that we still have to do from factory overhead, for which we already did our ledger account. See, there it was, indirect material there, and that was what was recorded or issued to the stores. Then we put in the totals. We come up with a balancing amount, and that balancing amount we simply bring down to the next financial year's beginning. Okay, understand something. So I think you've seen how this works. Sometimes they give you the balancing amount, and you have to identify the account with which we are going to balance that particular ledger account, the corresponding or the contra account. You have to identify it. In this case, you have the contra account. That is what was given, and so then you calculate the balance. So either you're going to have the balance and balance the total with a contra account, or you're going to have the contra account already and you're going to balance it by putting the balancing amount in there. Okay, so that is with regard to indirect material. And now we can actually move on to our cost of sales. Okay, so our cost of sales, remember, we had cost of sales in our finished goods. That is where we have it. Look here, this thing went a bit wonky, this block of mine. Don't worry about that. So now when I'm doing my cost of sales, I'm expecting an entry on the debit side that says finished goods to that amount. And that is exactly what I have. Finished goods, recorded in the general journal, to the amount that's there on the 31st of January. I'll fix this later. Clearly, when I wanted to put it in a dark block, I missed a column. I will fix that. So that is what we have. And then what we do, we simply take that entire amount and we balance that against our trading account. Okay. Because why, guys? The trading account is going to show us our gross profit, while the profit and loss account is going to show us our net profit. That's all what the trading account and the profit and loss account do. The one indicates your gross profit and the other one indicates your net profit. So in this case, we have now cost of sales, because the moment we have the cost of sales, we can actually complete our trading account. So let me prove that to you. So here we have our trading account. Okay. Cost of sales that I just calculated there. But we don't just have cost of sales, we also had sales in what was given to us. It says there's sales of finished products given. Okay. Now you will see I stopped with a highlighter on the work to worksheet. So everything that is left now, I know that I have to deal with. So one of those things was the sales of finished product. There's still these things here that's outstanding, and I still need to deal with them. But this is everything that's going to influence our net profit. So I expect to do that in the profit and loss account. But you will also see here that there was a sales return. Where is that sales return? Sales return of finished products. So somebody brought back product that they bought to the tune of 58,000. Now there is two ways and you can do it. You can say here your sales, and next to sales in brackets say the 10 million minus that 54, or you can do what I did. I just created an entry there for sales returns that I've spelled very badly. Okay, and then the sales returns was recorded there, and then I have that amount. So now I've done the sales returns as well as the cost of sales. Okay. Now, clearly, if you look at it, in this case, my credit side is way more than my debit side. So I'm simply going to put that sales amount in here. Okay, when I total it, and I'm going to take that same amount now to my debit side. And really what is left here now will be my net profit, or my gross profit rather. Okay, so there it is. And my gross profit is what I'm going to take to my profit and loss account. Just go through it again. We have the sales, we have the cost of sales, and the sales return. Cost of sales was calculated by a contra account entry from our finished goods. Okay, that's how I got it. I've now put it into the trading account. The trading account only talks about the gross profit, and the gross profit really is my sales minus my cost of sales. That is it. If there's sales returns, then obviously the sales go down. Okay, so now I have completed my trading account, and now I can finally complete my profit and loss account during the year. Okay, first, let's have a look here at what we had in the trading account. In the trading account, we had the profit and loss as the contra account in the debit side. So in the profit and loss account, we expect the trading account to reflect on our credit side. But now you will remember, in our Word document, there is all these other expenses that we didn't put in yet, and we can't just ignore them. So now we must record the admin office expenses for electricity, telephone, insurance, and rent, as well as the selling and admin cost there, as well as the stationery there. So when I go to my profit and loss account, these are the things that I'm going to include there, not my profit, sorry, not that one yet. All of these are going to be recorded in General Journal, and in all cases, the amounts were given. Okay, you will notice though, and hopefully we still have a healthy business, so the profit and loss should be a lot more on the credit side because we want to show a profit. So that is the amount that we total. That will also be our balancing amount. And then really the balancing figure that I will get here by subtracting all of this from the 7,300,000 will be my capital or my net profit. And that net profit is then 5.889 million. Okay, nice little profit that the company turned, and you have completed all the ledger accounts that was required in our assignment, question 1. Okay, thank you guys. I'm going to stop the sharing and I am going to end the meeting. Thank you.